Hi, my name is Steve Medina. I'm a mortgage lender with Union Home Mortgage. We have seen a lot in the news about rising inflation and interest rates, and I'm sure many of you have been feeling this in your personal business as well. There's a lot of uncertainty and fear in the market, and there's no doubt that we are experiencing some difficult shifts. But what overcomes fear? Well, I believe many things, but we can overcome fear through knowledge, understanding of the market, and the trends that we're seeing. So I wanted to take a minute and break all this down in a way that you can easily explain this to your clients. So why are interest rates so high? Although historically, interest rates are still lower than the 18 to 20% that we've seen in the past. We know the Fed has been raising interest rates on the Fed funds rate. But it's also important to know that the Fed does not control mortgage rates. It's the Fed's job to fight inflation. And we've seen the rise in the Fed funds rate and mortgage interest rates. And it's easy to confuse these two rates. So what drives up mortgage interest rates? Well, that would be inflation. And we have inflation from global supply chains and shortages. We are now seeing the effects of the COVID lockdowns. So what is the Fed doing to combat inflation? They are raising the Fed funds rate, which controls car loans, credit, and most importantly, commercial loans, not mortgage loans. The Fed raising the rates will tighten the availability of money, causing the economy to slow down, and ultimately what they're trying to do is lower inflation. There's a term for this called demand destruction. And this is where consumers decide that it's not worth purchasing a good or a service. And we've seen this in our market. But real estate is different in that this can be the best time to buy. Many consumers are looking to the last housing crash to rationalize waiting. Maybe they're thinking that there's going to be another crash. But we're not experiencing the same factors as the last housing crash. The last crash had way too much inventory. New construction at that time set completion records that we still haven't seen to this date. And for the past couple of years, inventory for us has been slim, although demand this year has decreased. Inventory is still very low nationwide. So I know talking about interest rates and inflation can be a bit dry, but this is important, so stick with me. When will mortgage interest rates come down? Rates will come down when we get more goods flowing in the economy. And we've all heard that the Fed is going to continue to raise the Fed funds rate. But we know now that that is not attached to mortgage rates. Right now, market trends and historical data are showing us that interest rates follow inflation. When inflation ticks up, mortgage rates tick up. When inflation ticks down, mortgage rates tick down. And we now understand the relationship between interest rates and inflation. Many Fed officials in the past have raised the Fed's funds rate, and mortgage rates have come down. Why did this happen? Well, it's because mortgage rates are based on inflation. So when will we see mortgage rates come down? When inflation begins to drop. So ultimately, the destination for mortgage rates are to come down when inflation comes down. And we have a little bit of good news in this area about interest rates and inflation. We see supply chains are starting to improve, goods are starting to flow, and the Fed rate hikes are starting to slow down the economy and inflation. Now, all of this takes time, and it may be some time before we see mortgage rates start to come down. So we have to use every tool that we have to get through this. So what will we do in the meantime to help our clients? Well, number one, we're seeing the ability to negotiate terms come back. And last year we saw some of the most crazy offers over list, no appraisal, no inspection. And we can all agree that the past 2 years of real estate were a bit wild with little room for negotiation. Number two, I think it's a great time for buyers to know that they will not be stuck in a 7% interest rate for 30 years. Interest rates come down and they can refinance into a lower rate. And number three, we're offering great programs like the 2-1 buy down, where sellers can buy down the buyer's interest rate for the short term. And this is a great product that can benefit both the buyer and the seller. So it's important to remember that mortgage interest rates can be temporary, but finding the home in the school district or the area that you want to live is long term. It's a proven fact that personal net worth is largely made up of home equity. And we're helping our clients create wealth through home ownership. We can see the opportunities available in the current market, and I believe that our best days are ahead. So let's use this time to be the best version of ourselves. I would be happy to discuss this further with you. So let me know how I can help. I look forward to all of you winning in this market. I appreciate you and all of the hard work that you do, and I hope you have a wonderful holiday season.